following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to an excellent hour, the Power Trading Hour. With me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends, do we go.
The following takes place between 2 p.m. and 3 p.m.
The S&P is up a whopping 9 points. Volume comes in just at this minute. Click over the 2 million shares on the day. So is it bad? It's not as bad as it has been. Certainly not as good as it was even through the summer. So I'm going to say a light volume move. This is, of course, the hour that for the most part, volume just drops out till about 3:15. So we'll see if that continues on. Today is options rollover. That is when a lot of stocks have to be bought and sold to get the hedges off and then back on for future months. So it's not uncommon to see either today being an up day and then tomorrow being a down day, and then Wednesday actually showing the true direction of the market. But that's kind of what it is. Normally, if today was a down day, then tomorrow would have been an up day, and then we would have looked at the market on Wednesday to see which direction it is. But a great deal of business has to do with options, and most of those options are hedged. A lot of them, probably 3/4 of them, are hedged with actual positions in the market, and that kind of sets up exactly what you're looking at today, which is you get these light volume pops. You don't have a lot here. 9 points is not all that exciting. We did get up to 21.55. Tomorrow would be much more interesting if we got yet another pop. But at the moment, all I see is yet another light volume move in a market that we're kind of caught in the doldrums for. You continue looking at the dollar, which is up 12 cents. You continue wanting to keep a very close eye on that DLT. It's led the market down by a few days. Today, it's off 83 cents. It's back to 123.48. Looks like it had a blow-off top in this move up to 133.72. So I'm expecting one day we just walk in here and we're down to 2.5, 3 points in the TLT, back down to the 128 area. I don't know how confident I know that it's going to come in one big swoop, or if it's going to come in a matter of a lot of days down. But it just seems to me like that area of congestion is probably going to get gapped over. And if we have any more Fed presidents yelling and screaming that they want a high rate hike in December, I suspect that we already know now that the answer is that they're raising in December. And the question is, when do they raise next? At what rate do they raise? Just what are people interested in getting? We're up, 9 points. But a lot of the stocks that have not been performing well continue not to perform well. We're seeing the IBB off about 62 cents. No big whoop. But we're always kind of pushing into these markets with light volume. IWM looks like it's kind of come off its top. And again, tomorrow, more than likely, a move down. And then we find out what happens on Wednesday. So in the meantime, let's get this party started.
That it's all just a little bit of history repeating.
It is nothing but history repeating. On this day in 2003, the supersonic Concorde jet makes its last commercial passenger flight, traveling at twice the speed of sound from New York City's John F. K. International Airport to London's Heathrow Airport. On this day in 2003, the British Airways jet carried 100 passengers. And as I've said before, I've rode on the Concorde twice, once going over there and once coming back. Both were paid for. I would never pay $5,000 to $9,000 it took to go back and forth. But an interesting deal nonetheless. Probably a very good indication of a business that never made sense. And when you look at it, Boeing had their own competing plane that they never got past the kind of a rough prototype on. But it made me think about vast prognostications by folks that never really think all the engineering issues through. Concorde never really made any money. It was more of a status symbol for the Brits and the French, and it was okay for that. But of course, that day in, 2001, where the tire blew, that was kind of the end of it. When you found out that you could shoot a .22 bullet at the Concorde and take it down if you hit it anywhere below the wing next to the tire. A lot of these things, if you can even talk about the latest smartphone from Samsung, in that there's always this one little thing and you just didn't get it right and just never did work, and you try to fix it and it doesn't make it any better. But a very interesting plane. They had some real problems with it after 9/11 anyway. They were looking at trying to retrofit the planes. If you never were on the Concorde or never even got to sit in it, much less actually ride on it, it was a rocket ship ride. Did make you think that you were going to the theme park. But the most interesting thing to me is both times I rode in it was probably 1991 and I think 1996, something like that. Both times I rode in one, but the most interesting thing is they had no bulkhead in both planes that I flew in. Literally, I was staring at the back of the head of the pilot. There was nothing holding them out. I think that they put in bulkheads after 2001, but that really messed up both the performance and the weight distribution on the plane, which was also a problem. They finally gave up in 2003 on its last flight, but makes you think about the folly of men. We always think we can get everything perfect. Sometimes it takes, the first flight on that was 1976. I think the first commercial was 1998, somewhere around in that. I flew for 20 years until you found the Achilles heel. But it makes me think of a lot of people making wild prognostications, much like a certain Mr. Musk of Tesla fame, who was running around telling everybody how he's going to put 5,000 people on Mars. But he didn't bring up the fact that they would have to be mole people. Yes, because it has no magnetic core. Mars has no way to shield us from all the horrible things out there in the universe. You would die in about 2 weeks on the surface of Mars. Mole people. That's the theory now. Because you wouldn't be able to live on the surface.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And of course, the big news going into Friday and the close in today was AT&T and Comcast's merger. And I was watching some of the coverage and the talking heads from AT&T Comcast telling everybody why this would be such a great deal. And all I could think of, and everybody chimed in by 11 o'clock, I was hearing the exact same thing on CNBC Financial Infotainment. And that is, man, do these arguments sound exactly like the American Online arguments in 2000? And I don't know if you can say anything else. John Legere from T-Mobile basically saying that these guys are going to go down a rat hole on this, and he's going to usurp them within 5 years as a much bigger carrier. I think he's probably got something. He's the only one in that business that understands new principles of disruption in the market. AT&T just wants to buy it all. I think it could probably be one of the worst ideas since the AOL Time Warner merger, but who knows? I mean, you've got a very discredited load of things that come along with Comcast, like CNN, and other things. So it just, what do you do with a business like that? Of course, the idea is that these guys are going to be able to set up their own little fiefdoms and force you to watch what they want you to watch. I just don't see how that's ever going to play Republican or Democrat in the White House. But there's nothing new. Everything is a repeat. And this one just smells almost identically as horrible as the AOL Time Warner merger back in 2000. And the funniest thing that I remember about that whole merger was that my accountant was talking to me, and he was telling me just how great a deal it was. And I thought, you know what? I better short this. And I made a lot of money on that. I thought, if this guy, at best, it was a draw. So I kind of like the trade back then. I probably would think the same here if this ever goes through, and that is shorted as soon as it's done, because there's no upside to this. There is only downside and maybe going sideways, but it would be slow and painful. There's probably better and easier trades out there to be had. And think of anything else. You can give me a phone call at 877-927-6640. You can email me at path@tfnn.com, and, of course, post messages in the den. And, yes, I will take a round of...
I informed you thusly.
For how polls are rigged. And now we have that WikiLeaks email showing you almost word for word how they are. I think it's very interesting to see how people that lie for a living, i.e. politicians, try to pull the wool over everybody's eyes each time. And I think probably a Nobel Prize should go to Mr. WikiLeaks, whoever found all this stuff, because I think we have a right to know just how the cake is made, what's inside of it. And it's pretty horrible stuff. But at least we won't be under any false misperceptions of how our democracy works and doesn't. But very interesting stuff. If you haven't caught it, well worth reading. What else do we have going on out here? We got a few other things happening. What do we have? NVIDIA is up. NVDA. Very interesting reason for it being up out here. We're going to watch the volume, but it looks like it's not going to make the 10 million shares we had previously on October 4th. NVIDIA is shipping a brand new set of low-end video cards. They are directed directly at AMD and their low-end video market. I don't know if it's enough to put AMD out of business, but it is enough to put a real hurt on AMD. And these new video cards, man, when I think what I have in my machine here that I bought a year and a half ago to what is available today and the price points and the performance on them, computers may not be getting that much fast, but man, video cards are getting that much more powerful all the time. Take a quick look at AMD out here. AMD opened lower. It's kind of come back up today, but again, not a lot of volume. AMD announced on Friday that they're going to drop the price of all their low-end cards by $10, pretty much in advance of NVIDIA shipping their cards today. And I don't know why that would make these guys look any better or worse. My thought is that this thing is going to come back down yet another time to the 566 level. If it came back down there with light volume, there may be a reason to buy Advanced Micro. Other than the video card business, I don't see a reason to own it, though. Other big companies of interest, BEAV, which is BE Aerospace, is getting bought out by Collins today at a huge premium. From Friday's close, nice bounce. This one actually makes sense. Collins is Rockwell Collins, excuse me, is down, and it's down on huge volume. A lot of people thinking that they paid too much, and that's it. I got a question out here. Got a question about. A lot of people, the AT&T Comcast thing is that a lot of these big, huge mega mergers happen at the top of the market. And the answer is yes. It seems like you can't go out and buy somebody when everything is horrible. You got to wait until everything is great. I'd always think that you want to buy when there's blood in the streets and sell when they're yelling, as they said in the hog pits in Kansas City. Buy them while they're crying, sell them while they're yelling. Unfortunately, it just seems like big CEOs can't wait to buy another company at a high. This seems to be that, and at highs of the market. So I would not be skeptical of that thought out there. 2150, volume's 2.1 billion shares. So no big whoops out here other than we've taken a little bounce off of 2122. But volume is not saying anything out here. I still suspect that we're going down to 2090 before we go any significantly higher out here. But again, you never know when the Fed's going to come, but do a drive-by and have a bazooka of money to shoot at the market. But it just doesn't seem like it's working anymore, especially they pretty much worked with the dollar, and now they've kind of lost control of the dollar. So I just think it's just a matter of time before they lose control again and this market slips just one more notch lower down here. Anyway, when we come back, we got a lot of stock to look at today. Got open phone lines at 877-927-648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we got Mike in Lakewood, and then we got Phil in Denver. But Mike in Lakewood, how you doing today?
Fine. It's Lakewood, California, by the way.
Oh, okay.
Because there's a lot of Lakewoods.
Lots of liquids. Okay, I just saw a C there. I didn't know where to guess.
That's all right.
Anyway,
No problem.
you want to look at eBay?
Yeah, specifically the puts, right about where the stock is at. The stock was down sharply last week. It's bouncing a little bit today, but the bounce is pretty anemic, and they look pretty cheap. Maybe I'm not looking at them right, but I want to see if you got any kind of opinion on it.
Well, this is right back into support. So what are you thinking? Where do you think this thing goes?
Well, I'm looking for it to hopefully bounce to maybe another point higher and then tank, because it's trading right near the top of its range.
Yeah. For me, if I was playing these, the risk reward does not exist until you probably get to about $31.
Okay. Well, we differ by about a point. Okay.
Yeah. You need to get back in there, pretty much right underneath the big candle out here on the 3rd of October. Had 12 million shares it went up on. That's kind of where I would look at the only resistance where I'd want to pull the trigger on this thing. And the trade would be down to $27.25 on the equity. So, yeah, how much are the puts right now?
Well, right now the 29s are only about 65 cents.
Yeah. Everything I've seen that's gapped down like this has come back up, fill the gap, and then the wheels have fallen off. The problem with trying to take them at $30 or $30.50 is that your risk reward is just so much better when it totally fills it, because you know fairly quickly whether or not you're going to be right or wrong.
Okay, well, I value your opinion. I'll watch it. Maybe I'll just wait till December. Who knows?
Yeah, I wouldn't be surprised if you get a bounce or something out of this thing. But, normally I want to see something that moves about 10%. That's about $3, at least in the underlying, to make the options worth it. So you need about $31 to $28 to just get to the 10%, right?
That'd be right. Okay.
Yeah, so that's where I'm going to say, if you don't have a 10% move in the underlying, it's very tough to make these things going. You know what the implied volatility is on those 29s?
No, I don't.
Okay. Maybe I can look that up real quick. Which ones? What month?
November 29s right now is what I'm just looking at as a point to discuss.
Okay.
And the stock's trading right at 29, a couple of cents higher.
Okay. Hang on a second. November 18th?
Yeah, November 18th is when they expire, correct?
Yeah, okay. Just wanted to make sure you weren't picking one of the weeklies out of there.
No, I hardly ever. That's too short of a time span for me anyway.
Well, one of the other things I look at is that the implied volatility is under 30%. So you're good on that. It's 26%. So I think you're on the right side of it. But when I look for things, 10% move in the underlying equity at a minimum, and under 30% on the implied volatility for the equity you want, or for the options you want.
Now, are you? I'm sorry, I didn't mean to interrupt. Go ahead.
No, go ahead.
No, I was asking, when you say 10%, are you talking about 10% higher from where it is now, or? No,
I'm saying that if you bought if you were buying puts on an equity that was $100, that it at least had to go from 100 to 90.
Okay, all right.
The equity needs to move from the time you buy them to the time you exercise them at least 10%.
Oh, I see what you're saying. Okay.
And then the implied volatility should be under 30%. That dramatically changes your odds. If you get something like an implied volatility of 50%, your odds get down to about 2% that you're ever going to have a profitable trade. So there are some very specific things that have to go in to you buying an option and having a fighting chance, right?
Right.
So,
Sounds
and
like
those are the two biggest ones. That the reason why I probably would not get into these is, and normally I would short this stock, the equity, is that I try to buy options on stocks that are above $100, because the chance, it's the same thing as a stock going from $5 to $10 is 10 times more likely than a stock going from $100 to $200.
right.
There's just you got the law of large numbers working against you
Right.
on the upside, and from the $5 stock, you actually have the law of large numbers working for you. So to me, under $100, I try most of the time to buy buy the equity, short the equity, and above it go for buying options. So I don't think that there's anything else that really compares to eBay out there. They're kind of a one-trick pony now that PayPal is gone.
Yeah, they're kind of in their own.
Yeah, there's not a lot. I would love to see other charts in the same sector to see how they were behaving, but there really isn't anything. And that's another thing I kind of like. Either an ETF where you can go and look at the individual stocks, or at least a stock that's in the sector where you can go look at the other ones. And that's another thing where it's not that it's a bad trade. It's just that it's harder to get a little bit more info on the way that the group is working when this thing's kind of a one-trick pony. So those would be my initial thoughts on looking at a short like that.
That's much appreciated. I really do appreciate it. So you have a good day.
You bet. I'm going to go to Phil in Denver. How you doing today, Phil?
Hey, Dave. How you doing today?
Just another day in paradise.
Yeah, there you go. Hey, could you take a look at the dust for me? I took a position in this maybe 2 or 3 days ago when the dollar started breaking out.
Mm-hmm.
And give me your opinion on this. I'm just curious.
I think you got a good chance of an ABC up in this. Is that what you were looking for?
Yes.
I think you've got a good chance of an ABC up in this. Hang on just a second. See if I can get my thing working out here. Okay, if you go to 5136, is it out there? No. Okay. Let's go back to the bigger one out here. See, let's call that one the A. Let's call this one the B. Oh, can you hold through the break?
Yeah, sure.
Okay, we'll be back. We're going to go do the ABC on this as a potential upside when we come back to look at dust to 3 times your shares with Phil in Denver in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And hopefully we're still on the line with Phil in Denver.
Yes, absolutely. I'm here, Dave.
Okay. So you've got a good entry into the dust. You got a nice amount of cash sitting out here. Now you're going to have a couple of steeples to go through before you check the B on a possible ABC on the way up. The first one's going to be at about $45.25. That's where you've got a double gap going back to the 13th. And, you know, that looks pretty good. I think you don't need a lot of energy to get through that. You got a little gap at 47. I don't think that's going to be much. Your real resistance level is going to come in right at $50 and pretty much roll to about 54. Yeah, let's take a look here. You know, you did a 60% retracement. The energy, I don't know if you can see it on Tiger TV or in the den, but the energy from that October 11th high at 51.35 on the way back did come back on lighter energy. You tested the gap that gapped up with 16.6 million shares with 8.3 million shares. So you got just about every ingredient out here. The only thing you're really waiting for now is a test of the B point at $51.35. So, you know, you got some resistance a bit at that $45 level. If it breaks the $45 and let's say $45.50 level, then I think you got an 80% to 90% chance of $51.35. And my guess is the energy in that right there is going to tell you whether you're going to break that B point.
Right. My thinking is if the dollar actually breaks higher, that maybe I could get that full move.
Well, I think you get 100 on the dollar index. I think you get 51.35. The question is whether or not it breaks out or not, right? And that is probably more indicative than anything that we see in this chart is actually what happens in the dollar. So, yeah, I think you're on the road to 51.35. Now the question is whether it's an ABC or not, and that's probably much more about what the Treasury decides to do than anything that we can see in a chart. Unfortunately, that's the downside of having 1 or 2 or 5 individuals make a secret decision. It's kind of tough. So I think you got a huge winner out here. You got into it correctly. You did it, with half the volume of that gap up, which is exactly what I always look for. It's got everything you want. The downside
Right.
is that you're at the mercy of a handful of people that could come out and decide to destroy the dollar in any single day. But
Right.
you've got enough room to ride, right? And
yeah, I moved my stop up, so so I'm in a winning position. So
yeah,
but-
unfortunately, you can come down one day and
Yeah.
take you out, and then miss all the upside. Jesse Livermore said it. Buffett repeats it, and that is you kind of have to be greedy when other people are scared, and be scared when other people are greedy. And I think at this point, I think you probably have a lot of people that are kind of a little scared in gold, and I think it's time for you on the other side to be kind of greedy. So I would probably, huh?
I said, wow.
So yeah, I mean, when you get these giant winners, they're generally because you had pretty wide stops, not because you had very narrow stops. That's what I'm saying. You have to be greedy and be willing to give up a fairly decent profit that you have today for a much larger profit tomorrow. And on the opposite side, when you're a losing position, you have to be much more worried that your losing position will become a much bigger losing position, right? So you want to get out early when you're on the wrong side. When you're on the right side of this, you want to do everything you can to be even more right. So I would probably the worst thing on this trade would be one of two things. One is making your stop way too tight, or just not taking the money. If you make the stop very tight, then you end up just pulling back, and then it takes off again on you, and you sit there and beat your head on it. But when you're talking about huge money, which this trade could be, right?
Right.
And I looked at it, I didn't take it. I'll slap myself, but it's a beautiful trade.
Okay.
Okay.
Hey, I have a. I don't know if you have time, but I have an investment question in terms of 401k money. I've been out of the market, and because I've been expecting this big pullback in the S&Ps, and we haven't really gotten it. And seasonality wise, this is when the market typically turns and goes higher. So I'm just kind of curious if you could give me a perspective on 401k money, on redeploying that back into the market possibly.
Well, I'm not.
Or do you still think there's a?
I think you're picking up pennies and dollar bills in front of a steamroller. If you're trying to bet that the market goes higher, maybe it goes a little higher, but you're basically trying to go a little higher for a little money. If there was some kind of indication out here that there was a lot more money, then I would say that. I'm always a fan of keeping cash. It's not a bad position to be in. Even some things that don't move or stocks that won't move much, I think are better off than trying to chase up here. I think probably the worst part of a lot of what folks do, including people that are very smart in the market. In fact, I put it in my Friday's newsletter. It was a letter that Buffett wrote to his shareholders for January 1st of 2000. And he basically states that a lot of people in the market are very much like Cinderella, except without a watch. And when 12 o'clock rings, they're all kind of shocked that they ran out of time. And I would just say I would hold your powder dry. I think that there are much better trades to be had. I wouldn't be fighting for 2 or 3 or 4 or 5% in a 401k when there's 20% to the downside. Maybe maybe that changes. Maybe the first quarter of next year changes that. I just couldn't. I don't see the risk reward. You know what I mean? If I was gonna be in anything right now, it would probably be a short fund, and I'm figuring that you're out of it in 3 months. And again, you're probably going to make 20% on the downside if you're successful. If you're wrong, you're probably going to give up 5% on the upside. And that's until that changes, it's very hard for me to be a bull. There's a few stocks out there that it might be worth it, but for the overall market, kind of tough for me to say that.
All right,
Thanks for the call, Phil. We'll be back after this short commercial interruption of the Power Trading Hour.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got the dollar up 8 cents. The TLT is off 70 cents. Back into this lower trading range where I think eventually it's just going to gap down to 128. And that will probably complete that move, at least for a little while in bonds. We're getting a little bit of push out here late in the day, but volume's 2.3 billion shares with, an hour and 7 minutes to go. So that probably puts us in at 3 billion shares, maybe 3.1 billion, which is about what we've done in the last 3 or 4 days, at least on the New York Stock Exchange tape. I had a question in my email, what I think about the NASDAQ at these highs, and it looks to me like they're horribly overpriced right now. The question is, when does this thing crack and crack hard, or are earnings really that good? And I don't think earnings are really going to be that good. I think we've got a handful of the biggest stocks driving this market, and that's always a time to be scared when a few stocks are basically carrying the entire load. And I think we've kind of had the early part of earnings out here very kind of bullish for a lot of these stocks. I suspect that the downside is going to be later in this earnings cycle as the dollar started to move up. And, you know, a lot of these stocks that report early really didn't see any push on the dollar. As we get into the next 2 to 4 weeks of earnings, a lot more of those folks are going to start probably talking about the dollar. And I'd say right now we got probably a 90% chance of hitting 100 on the dollar index. And at that point, we'll know a lot better. But until then, I'm more than willing to sit on my hands on shorts in the NASDAQ. And I may even add one tomorrow morning after I see how things come out. There's a few very nice patterns setting up. There's one that I want to get, but I got to wait until I see all the information tonight. So I'm willing to give it an extra day. But I think there's a few out here that could really fall like a souffle. Other things going on in the market, take a look at a few out here. You know, you got a few stocks that actually don't look as horrible as they sound. Yelp had kind of a nice rally. It had a sign of semi-sign of strength back on the 10th of August with 15 million shares. It gapped up. You know, the last 3-4 days, you've had 3.7 million shares, 4.4 million shares, 3.4 million shares. You know, if you got any kind of little sign of strength out here, this may look fairly interesting. This gappy area around 33 to 34 on Yelp has got a lot of action. In fact, let's go back even farther here. This thing has been a gap fiasco even back to, when is this? July 28th of 2015 and what is this? July 27th of 2015. You had two big gaps, and then the monster gap down after that on the 29th came into it. But even these gaps that started that monster gap down, which have now been filled, now you're coming back up. You came back down out here. So you're in this kind of trading range between, let's call it 30 to 34 area. And, you know, it doesn't look half bad. You wouldn't want to give this thing any more than a $1 stop. But there's a few out here that look like they wouldn't be that bad. But they are few and far between. I'm sitting on my hands, more than happy with my bearish positions today. We will see you tomorrow, same bat channel, same bat time.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com.
You're watching Tiger TV.
Like a moth to a flame.